Alison Salka, and welcome to another edition of LIMRA Unplugged. Today I'm here with Todd Giesing, who's the head of annuity research at the LIMRA Secure Retirement Institute, and we're here to talk about some research and trends in the annuity market. Last year was a great year for annuities. We saw 15% growth for the full year compared to 2017 results. Total fixed annuities also had a record-breaking year, up 27% to $133.5 billion, achieving the highest level of annual sales for fixed annuities going back as long as we've been keeping track. What are some other highlights from the 2018 annuity sales?
And Alison, 2018 was a bounce-back year for the industry, and we saw all annuity product lines experience growth. Variable annuity sales experienced growth for the first time in 6 years. But it really was fixed annuities that were the main driver of growth in 2018. Fixed annuities, they were fueled by indexed annuity sales reaching $70 billion. Now this is over $10 billion higher than the prior record growth. And fixed rate deferred annuities, they also took advantage of rising interest rate environment. And sales were over $45 billion. This is the first time we've seen sales at this level since the financial crisis.
Wow. So as you mentioned, 2018 was a strong year, with annuity sales closing at $233.7 billion. What would you say caused the biggest impact to sales?
Now, strong economic factors, they really helped the individual annuity market, not only helping fixed annuity products provide more attractive rates, but rising interest rates also help provide stronger guaranteed income solutions as well. Now, layer on top of that a clearer regulatory environment. This helped individual annuity sales reach those double-digit levels in 2018.
So after 3 years of declining sales, we saw double-digit growth in 2018. And is this the beginning of a rebound in annuity sales? And where do you see the annuity market going in the next 5 years?
And we see 4 key themes that are going to play out over the next 5 years. Number 1, fixed annuities will remain in the spotlight over the next 5 years. Number 2, we're going to see the market share of variable annuities continue to erode. Number 3, indexed annuities are positioned for significant growth. And 4, overall individual annuity sales will reach an all-time high in the next 5 years.
So that's a pretty rosy outlook. I've been hearing that there may be a market correction on the horizon. So what would be the driving forces behind that, and what impact could it have on the annuity market?
Now, Alison, there are numerous factors that can impact the sale of annuity products. From an economic front, rising interest rates and calming equity markets will be favorable as we look forward over the next 5 years. But what happens in the annuity market, it does go beyond those economic factors. Demographics will also favor the sale of individual annuities as we move forward. And our forecast is showing a growing population of Americans that are nearing retirement. Now, other factors will come into play as well, including political changes and the effects on regulation, as well as technology changes and how they're embraced and utilized by the industry. We also have to look closely at how much outside disruption will occur in our space.
So let's now take a closer look at the future of indexed annuities. Except for a small decline in 2017, indexed annuities have seen steady growth over the past 10 years. They've gone from representing less than 10% of the annuity market in 2007 to almost 30% in 2017. And after an impressive year in 2018, it seems indexed annuities are going to continue to grow. Why are they becoming so popular? What's driving it?
Now, when we take a look at the indexed annuity market, the products themselves, they have some key features that individuals are looking for in retirement. Principal protection, the potential for higher returns than traditional fixed solutions, as well as optional guaranteed lifetime income solutions. Now, with these key features, indexed annuities have broadened their appeal, not only to individuals that are nearing or entering retirement, but to advisors as well, as they're another option when they're helping individuals with their retirement plans. And when you look at who's buying indexed annuities, a majority of them are coming from individuals that are between the ages of 56 and 70. They're looking for that downside protection, guaranteed income, or a combination of both in their retirement portfolio. And we really don't see a shift in the momentum with indexed annuity sales. With the continued market volatility, people will be looking towards safety and looking to lock in gains and put some protection in their retirement portfolios.
So while we did see yearly growth in the VA market for the first time in 6 years, the growth was modest compared to fixed annuities. Fourth quarter results showed a slight decline in VA sales, which can be partly attributed to market volatility. And for the third year in a row, fixed annuity sales have outpaced variable sales. Will that trend continue? What else are you seeing for the VA space in the next couple of years?
And Alison, we need to look at this from a few factors. Now, short term, market volatility will continue to impact the variable annuity market, especially early on in 2019. But we do see that leveling off as we move forward. We also have to think about the competitive landscape, as indexed annuities are becoming more prevalent in broker-dealers, and the business mix for broker-dealers and manufacturers is shifting. They're looking for a more balanced approach between indexed annuities and variable annuities. When we think longer term, we do need to kind of think of the introduction of the SEC fiduciary rule.
Yeah.
We also have to think of the political climate. The results of the 2020 presidential election could definitely impact the regulatory environment moving forward. And with that, there's a lot of uncertainty and a lot of unknowns as we look forward.
Absolutely. So as we look ahead, you mentioned a few things that could be surprises. Anything else that the industry should be looking out for?
We're looking very closely at the impacts technology can bring to the annuity industry. Change, it's occurring at a very rapid pace. And how quickly the industry can adapt to this change could be one of the biggest factors. Now, integrating annuity solutions and their unique value proposition while enhancing the purchase experience for both advisor and consumers can help annuity sales grow exponentially.
Absolutely. So thank you very much, Todd. And that concludes another edition of LIMRA Unplugged. On behalf of Todd and myself, thank you for joining us.